Hi, it's Jim with Reidenbaugh Associates at Realty One Group Professionals. Today, we're diving into mortgage rates. If you're in the real estate game, thinking about buying a home, refinancing, or just curious about the impact of interest rates, this video's for you. Right now, we're just below 7% on a 30-year fixed mortgage. If you're sitting on the fence waiting for interest rates to drop before you make your move, you're not alone. My question to you is, at what interest rate are you willing to pull the trigger? What's the magic number? 6%, 4%, maybe all the way down to 3%? If you're not sure, it's most likely because you haven't equated interest rate to what your monthly payment will be. But before we look at the numbers, I want to talk about how interest rates affect home prices. When rates come down, more potential buyers can qualify for home loans. Buyers who have been on the sidelines due to restrictive debt ratios or, just not willing to make that higher monthly payment, suddenly they re-enter the market. This causes an increase in demand, which drives the prices of houses up. Do you remember in 2021, interest rates hit a record low of 2.65%. Most houses that came on the market had over 30 offers on them by the second day. My buyers at the time couldn't compete unless they had extra cash to offer way above the asking price and also waive inspection and appraisal contingencies. Now, with that in mind, let's take a close look at how varying interest rates affect your monthly mortgage payment. And stick around to the end. I have a couple of strategies to share with you that can put you ahead of this curve. Let's start with basics. We're going to work with a 30-year fixed mortgage for $400,000. Now let's see how your monthly payment changes as we adjust the interest rate. At 8%, your monthly payment for this loan would be $2,935. That's a big chunk of your budget. Now let's drop the rate to 7%. At this rate, your monthly payment decreases to $2,661, a savings of $274 every month. At 6%, your payment goes down even further to $2,398. That's $537 less than the 8% rate. Let's take it to 5% now. Your payment is $2,147. That's $788 less. That's a significant savings. At 4%, your monthly payment drops to $1,910. That's more than $1,000 less than at 8%. This is why even a small change in interest rate makes such a big difference. And at 3%, your payment is $1,668. Compared to the 8% rate, that's a savings of $1,249 every month. Incredible, right? Here's the full breakdown. As you can see, even a 1% difference can save you hundreds of dollars each month and thousands over the life of your loan. For example, at 6%, you save over $193,000 in payments over the life of that loan. Now, what about those strategies I promised? Strategy number 1, if you can swing it, buy a home now while the inventory is up and sellers are more likely to negotiate a better deal for you. Then, when the interest rates drop down enough that it makes sense, refinance at the lower rate. This gets you in a home at a great price and allows you to take advantage of lower interest rates when they come around. Strategy number 2, reach out to me now and let's get you pre-approved and determine what your sweet spot interest rate is for buying. We could set you up in a system that will notify you when the rates drop into your comfort zone. That way, you can immediately start shopping for your perfect home while most of the buying competition is just starting to get their ducks in a row. If you have any questions or would like me to run numbers for you at other loan amounts, just reach out to me. Thanks for watching, and I'll see you next time.